Greetings everyone, Joseph James here, schooloftrade.com. Happy Friday, May 7th, 2010. Had a great day today, had a great week. Having a great year of 2010 so far, guys. Before we talk about the trades we took today, I want to remind you guys about the link below the video. There's a link below the video. That link will take you to our blog. On the blog, you'll find every single video we've ever done. All the articles are there, guys. And we even have a nice convenient search box there for you in the upper right-hand corner. Now, while you're there, guys, use the search box. Subscribe to the blog. If you subscribe to the blog, you're going to get all of the new updates whenever we update them. Okay, so you'll always know when something new and interesting is there because you'll get it in your email box. And just subscribe by clicking on that subscribe button right below the search box, right? So don't forget about the blog, and the video is right below this. The link for that is right below the video. As you can see, guys, had a pretty busy day today. Biggest day of the year. Might be the biggest day of the year. I'm not sure. 1460. I think that's the biggest day of the year so far. I know the biggest day in the room has been about 200 ticks, so we weren't quite there yet, but we almost got we got above that March 2nd big day of 1320, but 1460 today, guys, 146 ticks, and we didn't even include the DX pattern long that we saw at the end of the morning here. We're going to cover the DX pattern in another video, one of our easy money trade videos. We'll go over just the trades we actually took today here, but you can see here 2, 4, 6, 7 total trades, all winners. With the exception of that two-step pattern at 9 o'clock, it was easy trading for us here in the room. And this is the type of environment that we really kind of, we look for, obviously, because when the markets are moving like this, our method works very well. It's when we run into those very slow, choppy days, we don't get as many opportunities to trade, we don't make as much money. So, of course, we made a lot of money today because we had a lot of opportunities. If the opportunities keep coming, we'll keep trading. And we saw a bunch from today. Let's take a look. But obviously, $5,000 this week, guys. Right, 5 days, you can see only 2 of them here were above $1,000, but $700, $900, $5,000 for the week so far, guys, and we're hoping to make that $10,000 mark here for the year, for the month of May. So we'll keep you guys posted on that. What's the most important thing that happened today? Well, of course, we're still seeing market turmoil because of the news, obvious reasons. Yesterday, we saw this big drop in the market, followed by the big bounce back up. I was surprised, as I said this morning, I was surprised that we didn't have more chaos in the market this morning. Things were relatively calm and relaxed, seeing, of course, what we had to happen yesterday in the afternoon. Now, Obama took the microphone about half of the morning this morning, and we really wanted to make sure that during this choppy, movement, wasn't too choppy until late in the morning this morning. The beginning of the day was actually real nice, big, strong moves. But it's important we follow our rules and not get wrapped up in following those so-called gurus or the so-called experts out there. Right, guys, all the news anchors, all the people on CNBC or Bloomberg, guys, those people are advertisers, right? They're paid to talk about the sky falling. So we don't really pay much attention to them, even though right now it's real easy to get kind of sucked into the news on TV and start getting wrapped up in all of these emotions on TV right now. It's important that we don't follow those emotions, we follow our rules. And remember, guys, if the market's moving too quickly, you can always wait. You don't need to feel pressured into trading when the market's moving very, very quickly. And we saw that today. There was a couple times today here early in the morning where the market was moving so dramatically, right, that even though the patterns were showing up, the spread was widening, right, meaning the difference between the buyers and the sellers were widening. And so with the spread widening, it becomes a real dangerous environment and a good way to give back a lot more money than you would like to give back. So if the market moves real fast, guys, sit back, wait and watch, wait for it to come back down to a tradable level. Now, Friday has an early close, so we expect Fridays to be a little bit early. So we look for 11 o'clock this morning. We look for the price action to start slowing down, which it did. But we always get our day started off with same way on the dollar. So let's first start by looking at the dollar index this morning. Now, the dollar index, unlike previous days this week when we opened up this morning, we saw a flat dollar. Right, you can see this sideways range here in the dollar that I've defined there for you. And we have, of course, double tops and we have double bottoms. And one thing that was a little bit interesting about this dollar was, if you looked at the previous day's movement, this range here from 85, right, 0.4, right, all the way down here to 84.4, you'll notice, right, what is it? It's a full 1 percentage point, right? So a full 1 percentage point from top to bottom. Now, look a little bit closer. See how they're around the half levels, right? 84.500, 85.500. See how they're around those half levels? So they're not at the big round number. They're at the half round numbers. And of course, big round numbers, half round numbers are psychological levels. And that tells us a little bit of indecision. Whenever you see the sideways market like that, at big round numbers, or in this case, at half big round numbers, usually that's going to give us a heads up there's a lot of indecision. And indecision in the market on the dollar is going to lead to indecision on the market on everything else we trade. So we're not going to trade the dollar, but we're going to use this dollar index futures market, a slower time frame here. We're going to use this to kind of give us a little bit of a feel for what the rest of the day is going to bring our way. So we knew it was a sideways market. With what happened yesterday, we knew to be very careful today, and we're going to wait and see what's happening. Now, fortunately, though, we checked our average to range, and it looked as though the crude market had been rising, right? The average to range had been rising since about 7 o'clock this morning. So we saw the dollar going flat, but meanwhile, we checked our vital signs in the crude oil. If you guys are watching us this morning, we did a good job at identifying the fact that crude, even though we were in a sideways market in the dollar, crude was still in a position to start moving for us. And we knew that by looking at a couple things. First of all, the average to range was rising ever since 7 o'clock. It was at its highest point of the week when we started trading today. That told us the range was increasing, right? Making us more profitable as the morning got later on, right? As the morning progressed, our trading opportunities should have got more and more. So knowing that, we then went into battle, got our dome out, right? Got our charts up and running, and we started trading on crude here. Now, this is a wonderful sequence here. This is the first half an hour of the market this morning in the crude. And I wanted to go over this with you guys because this is a picture-perfect sequence of what we see happen all the time. We see a back-to-back breaker pattern, two-step pattern. Now, a breaker pattern is a trend continuation pattern. A two-step pattern is a reversal pattern. So what's going to happen here is, guys, you're going to break to the downside for the breaker, test these lows, and then we'll bounce off the low of day for the two-step long. Let's take a look at it. Here was our first trade of the morning here. We came down, right? Short-term trend is down. We broke below support. We make our swing low here, and we break below that swing low. So at 850 on crude here, a breaker pattern short going with the trend as we started this drop. Now, this is one of those easy patterns, right? It showed up right in front of us. Lots of big sellers. Momentum curled and pointed back down. So everything told us to get short. 21 was the fill. +4, +8, +1. 2 off at 4, 2 off at 8. 2 off at 4, 1 off at 8, 1 off at 1. That's 17 ticks or 170 USD. Okay, so we put 17 in here on the first trade. Then, while I was explaining this first trade, we missed another breaker short here, okay, about 5-10 minutes later. So 8:50, then at 9 o'clock, we missed the breaker short here. I was explaining something to somebody about that trade. One of the collateral side effects of being an educator, right? Sometimes we get distracted by questions, we miss a trade, but that's okay though because we grabbed the next one, right? So we missed the first one. Missed the second one. Okay, there was a second move there at 9 o'clock, and then at 9:02 we took the second one down bottom here at the lows. Now at 9:02 we were now testing that low of day, which means we had to see green pace of a tape. We had green pace of a tape. We got short at 9:02, big sellers, momentum pointing down. 43 was the fill. A little bit of a bounce here off these lows. You can see that low here got tested there and then bounced back to the upside like that. That little bounce there got us out at +2 at our stop, so +4. Take 2 off at 4. Stop to entry +1. We got stopped out there, entry +2. So 2 off at 4, 2 off at 2. That's 12 ticks total, or 120 USD. So at this point, we had 3 opportunities to take this trade short here. We took 2 of them. I missed one of them going down. So we took this thing all the way to the downside here. Now we're testing the low of day. So now here at the low of day, as you guys know what we're looking for, we're always looking for that bounce off the low of day. And here we are, 9:08, just after the crude oil opens up, 9:08, we bounce to the upside here above this swing high level. And you can see it got pretty choppy there. What happened was, guys, at this low of day, I looked at my, if you follow me down here, right, I looked at my momentum indicator, and we see right away momentum had flipped up. And so when momentum flips, momentum flipped down. When momentum flips down like that, we also saw some speed slowing down. I flattened my position as a precautionary measure and got taken out at +1. So 4 contracts times 1 is going to be +4. All right, so we made +17. We made we made +12, and we made +4. Right, not too bad, not too bad. +17, +12, +4. Good way to get started here before the 9:30 U.S. Open. So that was our first sequence here on crude. As you can see, breaker pattern shorts, right? Trading with the trend down. We hit the low of day. We then look for the reversal off the low of day, and that's called our two-step pattern long.